Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of corporate filings. And guess what? Today we have another juicy quarterly report to dissect. This one is from Eledon Pharmaceuticals, and let me tell you, it's a tale of ups and downs, a bit like a roller coaster for your investment portfolio. Stay tuned. Ed, because we're going to break down what this all means for the company and its shareholders. Before we dive deep into the numbers, make sure you are subscribed to Corporate Decoder so you do not miss out on any of our future analyses. We also have a fantastic community over on Discord where we discuss these filings and much more. If you want to join the conversation, link is in the description below. Alright, let's get down to business. Eledon Pharmaceuticals has released its quarterly report for the period ending the 30th of September 2025. And as expected for a clinical stage company like this, it comes with a lot of important disclosures that can really tell us about their financial health and their future prospects. Let's start by looking at the company's financial position as of the 30th of September 2025 and comparing it to the 31st of December 2024. Take a look at the cash and cash equivalents. They started with $205,490, and now they have $3,669,000. That is a pretty significant drop, so liquidity is definitely something we need to keep an eye on there. Short-term investments also decreased from $119,629,000 to $89,732,000. This suggests they might be using their cash reserves to fund their operations and research efforts. Now let's talk about how the company performed financially during the reported periods. Looking at the income statement for the 3 months ended the 30th of September 2025, we see a net loss of $17,459,000. This is a big contrast to the same period in 2024 when they reported a net income of $76,971,000. That is a dramatic swing, likely due to changes in the fair value of warrant liabilities, which we will touch on later. For the 9 months ended the 30th of September 2025. Their net loss was $35,170,000. The research and development expenses increased significantly from $34,036,000 to $48,776,000. During the 9-month period, this increase is directly linked to advancing their kidney transplantation programs. Manufacturing activities for clinical trials. Looking at the equity section, we see a picture of a company still heavily invested in its future growth but facing financial pressures. The accumulated deficit has grown, indicating continued losses. Over time, the total stockholders' equity has decreased from $62,446,000 at the end of 2024 to $35,360,000 as of the 30th of September 2025. This decrease reflects the net losses and the changes in their financial structure. Now, for the cash flow statement for the 9 months ended the 30th of September 2025, the company used $48,250,000 in operating activities, primarily due to their net loss. They also provided $31,255,000 from investing activities by selling off some of their investments, but conversely used funds for purchasing other investments. Means their financing activities provided a much smaller amount this year compared to last year, with only $115,000 coming in from stock option exercises versus $53,355,000 in 2024. So overall, their cash situation has tightened. One very important point buried in the notes is a restatement of previously issued financial statements. This means they found errors in how they previously reported their financial situation. Specifically, they reassessed their convertible preferred stock rights and preferences and decided it should be treated differently for earnings per share calculations, and that is not all. They also reclassified their preferred stock from permanent equity to temporary equity. This kind of restatement often signals areas where financial reporting needs closer scrutiny. Eledon Pharmaceuticals is a company focused on developing therapies for organ transplantation and amyotrophic lateral sclerosis, or else. Their main drug candidate is called tegoprubart, an antibody designed to protect transplanted organs and prevent rejection. They have facilities in California and Massachusetts. Okay, let's talk about the risks. This is where the company lays out what could go wrong, and for Eledon, the list is pretty extensive. They admit they have a short operating history and have incurred significant losses. They also state that they will require additional funding to continue developing their lead drug, and a lack of this funding could force them to significantly alter their business strategy or even liquidate. The potential for dilution from issuing more stock is also a major concern. And of course, there is the inherent risk in drug development itself. Products might not be successful, and clinical trials can always fail. It is crucial to understand that drug development is a long and expensive journey. Now let's look at that big swing on the income statement for the quarter change in fair value of warrant liabilities. For the 3 months ended the 30th of September 2025, there was a gain related to warrants of $564,000. But in the same period in 2024, 2024, there was a massive gain of $96,439,000. This huge difference is partly because in 2024, a large portion of warrant liabilities expired, leading to a significant accounting gain in 2025. The fair value of warrant liabilities decreased by $229 million, which reflects a decline in the company's stock price. We can also see that Eledon has Series X and Series X1 convertible preferred stock. These shares have specific rights and preferences that management reassessed, leading to the restatement. The company also approved an increase in the number of authorized common shares from 200 million to 300 million. This gives them more flexibility to issue stock in the future, potentially for fundraising or other corporate actions. They had several significant financing activities in 2023 and 2024, with multiple securities purchase agreements and underwritten offerings raising substantial capital, but also leading to dilution for existing stockholders. And right after the quarter ended on the 12th of November 2025, the company announced another underwritten offering. This was to sell a lot more shares of common stock and pre-funded warrants, raising about $536 million after expenses. This shows they are actively seeking capital to fund their ongoing research and development efforts. Looking at the operating expenses for the 9 months ended the 30th of September 2025, research and development expenses increased by a hefty $147 million compared to the same period in 2024. This is mainly due to increased activities in their kidney transplantation programs, higher manufacturing expenses for clinical trial supplies, and more personnel costs to support these programs. General and administrative expenses also saw an increase of $114.6 million over the same period, driven by higher professional and consulting fees, and an increase in personnel expenses. This indicates that as the company grows, its operational costs are also on the rise. Now let's talk about liquidity. As of the 30th of September 2025, Eledon had $934 million in cash and short term investments and a working capital of $820 million. They state that this is enough to fund their operations for at least the next 12 months. However, they also mention needing additional financing to continue their work, especially for their ALS program, and they can't guarantee they will get it. There is a significant point here about their disclosure controls and procedures. Management concluded that due to a previously identified material weakness in their internal control over financial reporting, their disclosure controls and procedures were not effective as of the 30th of September 2025. This led to restatements in this and other reports. This is a red flag that suggests potential issues with the accuracy and reliability of their financial reporting processes. The risk factors section is lengthy and underscores the speculative nature of investing in Eledon. They highlight their short operating history, their continued losses, their need for substantial future funding, and the inherent risks of drug development. If their drug candidates don't get approved or face significant delays, the business could be severely impacted. Competitors are also a big con. Concern with many large pharmaceutical companies developing similar therapies. So what is our take on Eledon Pharmaceuticals based on this filing? Well, it is a classic example of a clinical stage biotechnology company. Investing in them is a bet on the future success of their drug development pipeline. Tegoprubart shows promise, especially in kidney transplantation and AL. But the path forward is fraught with significant financial and scientific risks. Their cash burn is substantial, and their reliance on future financing is a major risk factor that cannot be ignored. The material weakness in internal controls also requires careful observation. Investors need to be acutely aware of the high risk associated with this type of investment and understand that there is a real possibility of losing their entire investment. Alright, that wraps up our deep dive into Eledon Pharmaceuticals' latest filing. What are your thoughts on their financial situation, their risks, and their strategy for the future? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe to Corporate Decoder for more in-depth financial analysis. And don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching, and we'll see you in the next video.